morning, investors. Next Gen Dante here, coming at you with the pre-market action. So yesterday was an interesting day, and not only did we manage to give back all the gains from the PPP or the Power Pump pill, but we actually ended up just holding a range for a lot of the day, and then we just started tanking, selling off pretty hard after the 1 o'clock. Around 2 o'clock, really, it just started plummeting in the whole market in general, and that could be attributed to a couple things. Maybe one, the financial transactions tax that was mentioned, or two, even oil could have been bringing down the market here. You see that oil came down pretty hard, and we pretty much had, like, oil was leading the market for the past month, really, and then we've now hit a 6-day losing streak with oil, so that may attribute to some of the sell-off. But that being said, we got a few keys to talk over and things that we're going to be looking at today and how we're going to set up for next week going into this Quadwitching. So first thing is, yes, the financial transaction tax. I think it was a senator from Hawaii, whatever, suggested a financial transaction tax that would tax stocks, options, and all derivatives, basically ruining all liquidity in the market and screwing over a lot of people, because it would be a nice 1% tax. I think it was a high tax too, like 1.6% or something like that on all transactions, which is pretty heavy, because if you're buying like 100 stocks or more at a time, which these hedge funds are doing, a lot of them, and they probably get an exemption because they're bigger hedge funds and everything would get their exemptions and everything, and the cost would ultimately get passed on to retail traders. But I mean, think about it. If you're paying $100 every time you're buying 100 or like 1,000 shares or something, you're paying up $100 per transaction, buying and selling. And that's gonna cut into your profit margins by a lot. And so people are like, oh, getting scared, getting scared and getting shaked out. But I don't really think that's gonna come to like anything that's gonna be written into law, because again, that would kind of ruin liquidity in the market, and I don't think the powers that be would let that happen. Also, oil, there's oil pipeline lose. It was a 5-day losing streak for oil. Oil has been coming back down here. Oil, Exxon, get a little bounce up here in the pre-market, but we want to keep an eye on this. If this could just be a result of the market coming down in general. Because a lot of things were coming down across the board, but it's not too big of a drop, so I wouldn't be concerned just about yet. Just watch that. As far as the Quadwitching that's going to happen today, the expiration weeks that we come into here, the price usually stays within a range. Like, it can get a little volatile, but it's volatile within a range. Like, it's nothing to be scared about or concerned. But watch how the key is going to be watching how the stocks move after this expiration date, because usually we get a lot more volume or rather higher ranges of movement after an option expiration date is here. Every third Friday of the month we'll see this. But the Quadwitching is special because it's stocks, options, futures, everything all expiring at one time. You got 4 expirations in one date when the date aligns. This happens 4 times out of the year, but it's not usually anything different than just a regular expiration week that we go through. And so we're just going to have to keep in mind how the stocks move after this expiration when everything's free to move. So we're going to have to actually watch for the rotation. You got to keep that in mind, because the rotation was still in play yesterday. Even though the SPY with the tech led its way down, the things that were holding up was the Dow components. However, Dow ended up selling off too on the day once the selling got too heavy on the market side. But we see your value stocks like Disney and the cruise lines and even banks, they held up more of their gains throughout the day, and they ended up even closing positive on these banks here yesterday. So that's going to be keeping in mind. Just keep these guys in mind, and watch out for like JP Morgan, Bank of America, Chase, Citigroup. You're going to want to look at your cruise lines, Carnival Cruise Line, Norwegian, Aerial Travel, American Airlines, Delta, Southwest. As far as the best airlines to look at, because there's a lot of them, the ones that have the most relative strength are going to be Alaska Air, and Southwest Airlines. And I mentioned this before in the Discord, the reason for these guys having the most relative strength, and you can see they're actually even positive on the year, gaining back all of the losses from COVID. And the reason why these guys have the most relative strength is, well, if you think about the last time that we had people were scared to travel, or air travel declined, it was 9/11. And if you go back to the charts, you'll see that Alaska Air and both Southwest Airlines, out of all the airlines, they're the ones that handled the situation the best, and they're the quickest to recover. So you even see here, this is true with COVID, that they were the quickest to respond and easily able to recover in their stocks. Just keep in mind on your rotation there, because the rotation play may still be in play, but we're gonna see Monday what's really going to happen. I don't expect too much craziness today, but we'll see. And then also keep in mind that we are not down that far. Like, the SPY has come down with the bond yields going back down. The bond yields actually came back up. I mean, the yields actually came back. Yields came down. So TLT, this is the inverse, and sometimes I get confused when I'm saying this, so I'll accidentally say that the bonds are going up. But TLT, when this goes down, TLT is going down, that means the bond yields are going up, but the bond rates actually came back up, but SPY came back down. So we could really say that this is within the normal range of SPY, because we just hit an all-time high right here at 398. Though yesterday's sell-off was pretty intense. We came up down 1.46% of the day, so we're going to want to pay attention to see if this ends up accelerating or the dip buyers come in. Same thing with the NASDAQ 100 and the tech stocks, because they got the brunt of the sell-off. We'll see here if, as I was saying before, if they're able to bottom out right here, from we have this other low that we're leaning on, 310 area. If we fall through that, then we may see us gap filling back down to here to the 300 range. However, if we're able to hold up through here, we don't make a new low, we might see the same kind of movement here from the 310, and is a higher low that could push us back up. But again, on the upside, we have to get past 325 on the QQQs. That's the brick wall here. 5 highs up in this same area that we have to respect those highs. Once we get past that brick wall, there's a whole gap to fill back here to 330. So there's nothing holding it back here except for that 325 wall. So keep in mind, we're not down that far. So I mean, if you wanted to even load into some tech stocks today, if it ends up being a red day, I think that'd be a good idea, because again, the theory is to buy the dip and sell the rip, right? But if you're going in on this weekend, probably just start averaging in, and then Monday, we can kind of confirm which direction that we want to go into. Next thing you want to keep in mind is that, buy the dips, sell the rips, but also look at some of these earnings that happened last night for the potential plays. We had Nike and FedEx. I think those were the biggest ones yesterday. So we had Nike, they ended up selling off on their earnings, down 3% here in the pre-market. And then FedEx actually surprisingly went up. Was kind of bearish on FedEx, but they ended up going up $11 in the day on the after hours. So it's pretty interesting to see where they're going to open up. Watch where they open up today and see if they're able to stay in the highs of the pre-market move, or if they end up leaking right back out as soon as the market opens. But didn't get to read the reports yet. But my theory with FedEx going into the report was that they sold off pretty hard last time, but I assume that was just because the theory was that it's as good as it gets. Like, they were in the perfect environment for COVID, and if we're actually reopening, things like FedEx and Amazon, like, they don't profit from a reopening as much as they do from people being quarantined, because people order less packages. However, it did see that the street was leaning into the report very negatively, and that could have had an effect on why it was able to get such an upside, because a lot of people sold it off before even the report happened. So maybe it's just one of those things where it's the inverse. But I mean, playing these companies into earnings, it's really a coin toss, because the street expectations could lean either way as soon as the report comes out. I mean, it all comes down to forward guidance and what people think is going to happen in the next coming year. And so for the potential plays here, I want to look at airline stocks, as I mentioned before, watch the banks, Watch Tesla and Apple for tech. Those are going to be your leaders here. Tech sold off pretty hard, but Apple is holding that 120 line. Let's see if we can do you hold here, or as it breaks back down. The same thing with the Qs, that we have this wall that we have to get past to see if it breaks down to 116. If we do drop back below here, I would be a dip buyer, because again, these are the November levels here. So if we get back to here, those are November levels where we turned around to push up to all-time highs. So I mean, I think dip buyers are going to come down here even with all this crazy volatility. Same thing with Tesla. Watch out for them. I'd say they have to get above. You're going to want Tesla above 750. That's going to be a key level for that. So we need to close above 700. We actually got that close from the other day from the Powell pump. We ended up giving back all the gains there. So let's see if we can make a turnaround today, maybe come back a little bit in the next week. If we can get over 700 and hold, we might have a turnaround here. But don't catch this falling knife. It's just going to be more of a watch, and they can even make some good scalp plays since they have a lot of movement today. You saw that it went down $48 on the last update and ended up going up $100 on the day. So really, it's going to be important to watch this. And then finally, look out for the chip makers and Disney. So Disney actually had some pretty good news. Their deal went through with the rights for the NFL. They already own the ESPN. But I think the deal was to get like more, it was something along the lines for the rights for them to get more revenue out of it. That we saw them pop up a little bit off that news the midday, but then I mean they just ended up selling off with everything else in the market. So this is the one that we've been waiting for a potential play on. We saw that a lot of premium has been getting crushed on the board here, so even out to April, which is where we're really looking for a play for it, because they could take a while to move, but when they do move and they get that pop, we're going to see a retracement back to 200 as it retries that. We're going to want it to hold over 200 this time, or it's going to form itself a wall that is much like how tech has on the QQQs. We need this thing to hold over 200 because it's come up and failed about 3 times now. So it actually came up over 200 twice here, so we're going to need it to actually, third time's the charm. We needed to not have a triple top. That'd be pretty bearish. However, I'm bullish on Disney in the long term. We want to grab some contracts out for April. That'd be pretty good on the shorter end, and then even July, and some leaps. I really like Disney going forward here. So watch them. I'm probably gonna get a play on them on Monday, or even maybe average in if we give some momentum today and this morning. Might go in and maybe day trade it, but Monday's where I'm gonna really look for the play on this one, because on the days that they like to gap up, there usually is a little bit of movement to the downside in the morning, and it gives you a dip to buy. On this previous run up at 203, we saw them actually hit the low of the day of 193 on the low, and I saw the options go from literally 13 cents to even $2 on the day. So it was a pretty big movement when Disney goes crazy. And then finally, watch your chip makers. Intel had a pretty good pump up the other day too with this everything. They didn't sell off that hard, and the low of the day was 63 coming up from the 66 high there. So only $3 off less than $3 off the all-time high right here. So we're gonna want to look at that, and as well as AMD and Nvidia to see how they hold up. These can make for some very good plays. And there's one stock that would potentially get a play that I almost forgot to mention, and that would be Penn National Gaming here. See, it's come down a lot from being added into S&P 500. Here was the hype. It got to 142, but then everyone realized that it was a net sell because it's a lesser component in the S&P 500 than it was in its previous index. So therefore, it resulted in a net sell, and they sold off a little bit, and then it's just kind of accelerated in its sell-off because of the market. However, if the reopening is here, gambling stocks actually benefit from that. They're not one to be sold off. So if we level out here today and even get a little bit of turnaround, I would be a dip buyer on Penn Gaming, write it back up to at least test 130. But we have a gap to fill up here from the high. So you see 123 is the gap fill. Let's see if we can turn around and get back up to there. But all in all, guys, just be careful today. It's a quad witching. It could be volatile, but in a smaller range. So don't get too jumpy when you see things moving. It's not going to get too crazy. Next week is going to be the week where everything starts to move freely. Shares are free from the options and contracts that have been expired. And we're going to see a lot of I think we're going to see a lot of crazy movement. We're going to know who's going to win this rotation battle. Is it going to be value or is it going to be tech? I think we're going to have ourselves a clear answer next week. So you want to get into these plays, start buying some dips, average in small, and then save some cash and be ready. We're going to have a great time here. We're going to capitalize. And as always, if you guys have any questions, leave them in the comments below or hit me up in the Discord. And you can find information on how to join that at thenextgeninvestors.com. There's going to be a link below in the description. So like, comment, share to a friend that cares, and have a good day.